Construction is a very unique business, as you've been in the industry for 30 years, and it requires that special skills to make sure all the books are tied up and the jobs are making money or not.
Why do construction businesses break down?
When the money comes in, that's not your revenue. Builders would really understand this from the journey, from where they start and where they're looking at the profit.
And we want the secrets. Krish, how are you, buddy?
Luke, how you going?
I'm good. We are sitting down to have a chat about something that you've been doing. So I know you have a bookkeeping business out of Logan Home, and I hear some pretty special things. I've been in construction for 30 years, so I've asked for this opportunity to say, Krish, what are you doing differently up there, and are you going to share your secrets with us today?
Luke, first of all, thank you for having me. Not all the secrets, but I'll try to share as much as I can. We do specialize in construction bookkeeping. We have been doing this for a long time. As you know, construction is a very unique business, as you've been in the industry for 30 years, and it requires that special skills to make sure all the books are tied up and the jobs are making money or not. So it is a very specialized area, and we're very fortunate to have a team very, very specialized in construction.
Awesome, mate. I'm looking forward to learning more.
Awesome.
Probably some of the gems I wish I had learned 30 years ago, but let's get into it.
Hey, it's never too late.
So when this opportunity was coming up, I went to a network of people and said, what are the questions you'd like to ask Krish?
Awesome.
Or at least they didn't all know you, so I said a bookkeeper that has the secret. So I'm going to refer to my questions as we go through.
Sure.
And let's get through them. So the first one, it's a broad one, but bookkeeping, people think bookkeepers are bookkeepers, and that probably drives you crazy, right? So
yes.
Why do construction businesses break down when they select a bookkeeper of a blanket sort of nature?
Yeah, so people, exactly right. When people say bookkeeping, they simply say, look, money's coming in, money's going out. That money has to be put in software somewhere. Could be Xero or Myob, and then large basis, and where you go. So, okay, money's coming in, income, money's going out, expense, and the difference is profit. That's correct. But when it comes to construction, every project on its own is like a little business. It's got its own uniqueness. When the money comes in, that's not your revenue, because you just go and put the progress claim in and the money comes into your bank account, but not necessarily that's the full revenue. Or the first time the money comes in, that's huge revenue because you're trying to get more money for the first progress claim. And then you have your subcontractors and you have labor costs, wages. They don't relate exactly to the work done. So when you look at it, it's a lot of alignment that needs to happen from the monies coming inside of things and also from the monies going outside of things. And that's why when you look at construction bookkeeping, you have to look at each project as its own business and try to understand, hang on, yes, I've got this 20% of monies coming in, but how much work I've done so far? That's my revenue. And sometimes the subcontractors will give you a progress payment a bit light, but you still have to account for it because you know that the money is going to come in, the cost going to hit in, even though there's no cost now. So sometimes the first time you look at it, there's a huge profit, but then as the time goes, the profit goes down and sometimes it goes in negative. So that's why in one sentence, if you look at it, construction is so unique than a normal bookkeeping for a cafes or consultants.
I love that. Actually makes a lot of sense. So you've got 15, 20 projects. Each of these is its own business.
Correct.
And they all need to make money.
Correct.
That's interesting because I've seen that over my time where one business or one job will go bad, but the next job pays for it.
Correct.
So they're all pulled in and no one really knows which job's making money.
Correct.
I love it. All right. That makes a lot of sense. So another one here. What usually goes wrong first in construction businesses when job costing is not done properly?
So first of all, to answer that question, let's understand what is job costing, because there are different types of accounting in the accounting world. What we have financial accounting, where you look at profit and loss accounts, and you have tax accounting, you have management accounting with budgets and everything. There is something called job accounting or project accounting. This project account is uniquely identified as that's the project, that's the business on its own, the project on its own. And that's where, like I was explaining it before, how much money coming in, how much money going out. Now, what happens is when you start a business, it's quite common that you go and raise a progress claim to your client. So you go and get, say, 20% deposit. So if it's $1 million contract value, you get $200,000 into your bank account. But by the time the labor comes into on board and the subcontractor comes on board, 1 month is elapsed, and this $200,000 is shown as profit. And you make $20,000 in GST that you need to pay to the government. So when you first look at any project, when you're starting off, that looks fantastic. And where people don't realize is, hang on, my total margin is only 5%. Where am I getting this 20% margin from? And that's where the confusion happens. And then when you have like 3 projects starting, all 3 projects starting at the same time, you have this huge money in the bank, and builders go, all right, let's go and buy that Ram 250, mate. And that's where you have to really stop and think, stop. That's money is not your profit. You have to put it aside in your balance sheet like income received in advance. So that's like a liability. It's not your money. And that's where I see a lot of constructions when they start out the first time, they look at the money and said, yep, that's my money. That's one scenario. Second scenario is you hire your subcontractors, you hire your labor, and you have to put a lot of money into the business even before you get the first progress payment paid by your client. And you feel like, when am I going to get this money? So there's 2 scenarios. One is you get excessive money. You get like, oh my God, that's fantastic. One is like, where is this money? When am I going to get this money back? So those are the 2 scenarios I keep on saying.
I've felt that. And
did you? Yeah.
That feeling of giving out of your own pocket to get to the start line. And then you have 3 progress payments come in. I think you subconsciously think, I deserve this.
Yeah.
So you take, and tradies, I mean, a lot of people that go into construction have been a carpenter or something on the tools, and they grow up into that area. We're all about managing money.
Correct. Yes. And that's what I say, it's everything it's got its own speciality. Like, a carpentry, you're really good at your skill. You're not expected to know everything about money. And I see accountants who are fantastic with money. They're rubbish with making stuff. Like, they can't even put an IKEA furniture together. Now, we all have our own skills and we respect that. And that's how life is colorful, I guess.
Absolutely. Good answer. I love it. We'll move on to another one here. So I'm reading from the page here. Most builders think that they're profitable. What numbers do you look at first to check that is actually true?
Yeah, so like the first question when we answered, how a normal bookkeeper looks at money's coming in, money's going out, profit. But what happens when it comes to construction accounting? There is a very unique way that you need to look at it, because builders would really understand this from the journey, from where they start and where they're looking at the profit. So, when you, like a layman terms, if you're building a building, you first do the excavation, pour the concrete in, put the walls in, and then roof in, paint, and then carpentry. Let's say like that. There's 6 items. What happens is when you're actually setting up the project itself, there is the budget that needs to be allocated on each item. So like, how much am I going to spend for excavation, for the walls, for the roof, for the painting, electricity? And then that's what you call a budget, and you put a margin on it. Now, that's very important, because on the basis of the budget, you raise a purchase order. So you give it to the subcontractor or labor, and that purchase order is really important, because if it goes above the budget, straight away you're going to make a loss. you didn't even get an invoice from the subby yet. So that's where it's really important to track the budget and then the commitment. That's what we call commitment. The purchase order is what we call commitment. And then on the basis of commitment, we raise invoices. And that's where the supplier starts sending the invoices or the subcontractor gives us invoices. And that's what we call the actual cost.
Okay.
A bookkeeper only looks at the actual cost. But by this time, there's a lot of things already happened. So a construction bookkeeper, when he looks at the project, they need to look at, okay, what's the budget? What's the commitment? Even before they receive the invoice. So at every step, there is check mechanisms. And then, okay, if the actual invoice is more than the commitment, you're going to make a loss. And, okay, budget is good, commitment is good, actual cost is good, but all of a sudden the price go up outside because of the inflation and what we call forecasting. So you need to know, okay, for excavation, I'm not able to hire the yellow goods anymore. So I need to put double money. So that's what we call forecasting. And the final price increases. And there the profit. Are you going to make profit or not? Yeah. So there's different stages that you need to monitor being a construction bookkeeper. Yeah. You have a budget level, commitment level, actual level, forecasting level. Only then at that point of time, you actually see if this project is making money or not. And that's why it is very complex, complicated to understand and to manage. Unless you're a really specialized bookkeeper, like you will not have that overall picture. You're like, oh yeah, making money, good job. But then you end up saying, oh my God, last 3 jobs, lost money.
Yeah, okay. So let me break that down quickly.
Yeah.
I'm a builder. I've got 10 jobs.
Yep.
Each job is its own business.
Correct.
But now what I'm hearing, in each job, each stage is kind of its own business.
Probably we can say, or it's a unit within the business, you can say. Yeah. Because when you say each business, you really... Actually, you're right. Because each line item, you're seeing if you're making profit or not. You are right, Luke. Yes, you're right. You can understand like that.
So then that would help you then. Let's say you've got 10 jobs running again. And on stage 2, where we're putting the slab down, they all make a loss. It's very easy to see, okay, we're doing something wrong here.
Exactly correct. So you're exactly correct. So say, for example, you have 6 jobs and they're all slab stage. Then you know that this slab budget is 200,000. This slab budget is 400,000. As soon as you know that the price have gone up for this job, you can anticipate on this job as well, because you're going to use the same subby or a same supplier. So each line item can be understood as a business. That's exactly right. And you need to have that outlook to look at each line item by item as a business unit.
Yeah. Awesome. That makes a lot of sense. Where were you 30 years ago? We would have done well together.
No, this is exciting. Thank you for asking some fantastic questions, because this is classic mistakes a lot of construction bookkeepers do, or just builders think that bookkeepers know what they're doing. That's why it's a very specialized area. Yeah.
And look, you're talking to the right guy, because these are the mistakes I made. I was constantly looking at the bank balance and going, shit, we got 60 grand in there. Let's buy a jet ski.
Yes, exactly.
And not knowing that money had a marathon to run.
Correct. Yes.
Constantly getting to the end of going, oh, it's tight again.
Yes.
You kind of kick yourself in the pants, but you don't learn because the money looks good in the bank.
Yes.
What mistakes do you see around progress claims that slowly kill the cash flow without owners realizing it?
Good question. So I'll answer this the way. So when I say progress claim, in my head, it's very simple. The money is coming into our bank account. And when I say progress payment, that's the money I pay my subcontractor. So that's how I'll differentiate. So let's talk about progress claims. The first thing we look at any construction project is, are you funding the project or is the client funding you the project? So what happens is, the recommendation is the progress claim, sometimes it'll match to the money you're spending. Most of the times the progress claims are claimed completely different. They'll have 5 stages and they say stage 1, 2, 3, 4, 5, doesn't matter what you're spending. So at that stage, The first scenario is, you put a progress claim for 20%, say $1 million contract, 20% is $200,000 in your bank account. No expenses, money in the bank, fantastic, time for a jet ski. The second scenario is the progress claim happens after 2 months or 3 months because you're still managing your subcontractor, still managing your labor on the side, you're still purchasing materials, and this cost goes up and up and up and up and up, and there's no corresponding monies coming in. And that's where you see, when am I going to get this money back? So in these two scenarios, both are dangerous, but the way to manage it is you need to run the reports saying that actually who is funding my project. So if the money is in the bank, then that's good. Client is funding. That's exactly what you want to do. But if you're spending all the money, then there should be a point where it tips over saying that, okay, I've spent this money. That's my first progress claim. But the second claim, I'm putting more over and above of what I am going to spend. Because you're not the bank, you're a builder. And that's where a lot of builders struggle. Because you hear this, you go to QBCC, you go to Master Builders Association, you see these builders always thinking that, why am I being the bank? Why am I spending money and waiting for my client to pay me money? I'm being the bank and I'm paying interest on my bank loan. And that's where you see the progress claim issues as well. Either claiming too much and not recording it, which is good scenario you want to be in, but when you're claiming too much, record it correctly, or not claiming at all.
Okay. The feeling of, why you're being the bank, I guess that's where you're coming into a business. You may be, coming across customers that are feeling like that, and you straighten that out.
Correct.
Through better management of the money in, money out.
Yes.
Something else you just said was really interesting, that the progress claims don't match what's going out. So it's like this pinball machine of money coming in and then a random spray of cash going out.
And that's exactly right, Luke, and I see this day in, day out, because it's not correctly aligned, you really don't know, okay, you got 200,000 coming in from progress claim, but what am I spending on? Like, how much is the excavation cost? And even in the excavation as a business line item, how much is the labor? How much is the material? How much is the yellow goods hire I'm paying for? It's very hard to match, and that's where businesses go like, oh yeah, I got the money. All right, I got to spend. All right, I make money. So this is very rudimentary calculations, and they really need to have that construction bookkeeper to hold them accountable, saying that don't spend that money, or hey, can you go and claim, please? Like, there's no money. Like, for this, overall, the business may have money, but this project, you're not having enough cash. So please raise a progress claim to your client, mate. Please do it. So that's what the construction bookkeeper would do.
Are you then seeing that a lot of businesses pull the money from everything, and it's like, okay, we can't make a claim for that one today. It doesn't matter. We'll just drag some money from over here. Are you trying to like segregate that and keep the money more allocated to one project as opposed to sharing it through the business?
I ideally like it because I think a couple of years ago, QBCC came up with this thing called project bank accounts. Okay. I'm a big fan of it, but it's an administrative nightmare to manage it. Now, the concept is really good. Project bank account is every project needs to have its own bank account. And when the money comes in, that money stays in that bank account, and the subcontractors and labor would be paid from that bank account.
Makes sense.
Obviously, it's a nightmare to manage it, because when you do payroll, you have payroll from 10 different projects. Okay. So the payroll officer types in the payroll, and you have like, okay, $30,000, $40,000. So it's very hard to allocate which bank account. But conceptually, if you manage like that, it's fantastic. And I came across a couple of builders in my previous job where actually they did it even before government did this regulation. They go like, Krish, I'm a simple man. I just need to know if this project is making money or not. And that's how I manage it. That was fantastic. But if you really allocate that, that's good. However, what I suggest is when I go to a new organization, I look at, okay, what's your GST liability? Because what happens usually is people try to use the cash flow from the GST money. For the 3 months, they go like, all right, I'll pay Sabi, I'll pay labor. You're laughing, so you can relate to it. So that's how ATO debt goes up and up and up. And when the progress claim comes in, that's when they pay ATO. And then probably they might not do that very often, because from 1st of July, you're having this payday super that you're required to pay super on time, like the day you pay wages. And some people are also coming into habit of paying PAYG as well. So they're managing cash flow properly. So when I go to an organization, the first thing I try to suggest is, okay, have a separate bank account and put the GST aside, PAYG aside, and super aside. It's going to be very tight when we first start off. It's not an overnight setup that you can start running with it. It takes 6 to 9 months to build up your GST account. But once you have that, you really can sleep well at night, because you know that ATO obligations are met. You know that super is paid on time. And that will actually drive you to raise progress claim more frequently, so that you're not waiting for 2 months or 3 months saying that, hunky-dory, everything's all right. No, there is money that needs to be paid. So you go and collect the money from your client. So that's what I suggest, that keep at least for GST, wages, and super, a bank account aside.
Yeah.
And that's a better way of managing it.
This takes me back to a few conversations I've had with business owners and even myself. These BAS payments come along. We all hate paying them, right? We feel like it's our money.
Yes.
Anything we pay to ATO is obviously a little bit difficult.
Oh, yeah.
But, you have these conversations. People hate the system. They hate the tax. They hate everything. But I always say at the end of the day, you run a business here in Australia. That is the system. You can bellyache all you like, but it didn't help you.
Yeah.
All you did is make yourself unhappy. So setting up those accounts, having the money in there, is like freedom.
Correct.
So we got to pay it anyway. Why not just get it ready?
Exactly correct. Yeah. Once you exactly rightly said, look, because when you change the mindset saying that, hey, it's my money, I'm giving it to government, that's where the struggle happens. But when you say that, you know what, I'm like a trustee for it is ATO's money, it's not my money, it's GST, I'm collecting on their behalf, and then I'm just paying it. When you have the mindset that it was never my money in the first place, I think the mindset changes.
Yeah, okay. And is that something you do with clients, is actually just to even straighten out that? Like, this bit here was never ours?
Probably not in that bluntly, but when I put this bank account aside, kind of conceptually, that's what we're doing. Because as soon as the GST money comes in, that's put away in another bank account. It's kind of saying that, hey, it's not your money. Someone else owns it, like ATO owns it. People own it because that people superannuation. So that was never your money. Don't use it for your cash flow.
Yeah, love it. Awesome. All right, let's get on to the next one here, because we do have some cracking questions. Righto, retention looks small on paper. Can you speak to us about retentions and why they cause so much problems?
All right, look, retentions are such a big beast and nobody really pays more attention to it. So the concept of retention is, what happens is, every time you put a progress claim to your client, he holds back 5% or 10% of the value of the progress claim you're claiming. So when I talk in numbers, so let's say a contract value is $1 million and the retention is 5%. That means when the project finishes, you only get 950,000, not the entire 1 million. This 5% of $50,000, the client holds on to it for 1 year. And during this time, if there is anything, any defects or anything happens, they use this 50% and they go and fix it. This money, you will get it only after 12 months. So he retains this money and he calls it retention. So the industry standard is 5% or 10%. So to make it very simple, let's make it 10%. It's easier. So what happens, the way it works is, I got a contract value of $1 million. I put my first progress claim of 20%, which is 200,000. Good. So I go to the client. I say, okay, this is my progress claim, not a tax invoice, just a progress claim of $200,000. Thank you, client. Give me money. The client says, Krish, good, approved, but I'm only going to pay you I'm only going to approve 180,000. That 10% of $20,000, I'm putting it aside in my bank account or in his bank account. That 20,000 stays there until 1 year after the finishing of the project. So if my project already takes, say, 6 months, he's going to hold that for 18 months, that money, that's retention. So it looks very small on paper. When you raise a progress claim, you go like, all right, I'm going to get 200,000, but no, it's 180,000. And the GST is calculated on that 180,000. Okay. So it becomes a mess if you don't understand, because you're claiming 200,000, but he's approving 180, and 18,000 on top of 180 is 198,000 you get in your bank account. And you will need to put that 18,000 aside for the GST. Yeah. So when you're looking for the first time, you go like, how is 200,000 related to 198? And bookkeepers say, right, okay, they might made a mistake. And they put it saying that, all right, probably they short paid us. Or probably the invoice itself is 198 or 180,000 or 98,000. So they make a big mess out of it. And by the end of the contract, after 12 months, it's our responsibility to claim that retention back. And a lot of the times I see people don't claim that money back.
Oh no.
And the clients, they're not going to release it. They go like, all right, I'm waiting for the money. I'm waiting for the tax invoice. Like, they're not wrong. They just didn't get the tax invoice.
Okay.
So all of a sudden, say in your $1 million project, you're running on, say, 10% margin. So your profit itself is 100,000. Your retention is sitting at 100,000. And then all of a sudden you go like, where is the money?
Yeah.
So you're doing all this work. Where is the money? So that's why when people say retention, you have to be extremely careful and extremely vigilant about calculation, saying that how much money am I claiming? How much money am I getting approved? How much money am I getting in my bank account? When am I going to get that money back? So you need to maintain a retentions register. One project, no problem. Imagine this project's coming on, finishing up, on, finishing up, on, finishing up. It's an ongoing thing. How do you know which projects have you claimed retentions back or not? And most of the times, you might not work for the same client again and again. You might build a KFC here for one client. You might build a Subway for someone else. 6 months later or 1 year later, you have to go and claim this money from this client.
Okay.
So there's two areas where we can touch bases, like DLP we call defects liability period and practical completion period. Again, there are months when you can claim and everything, but yeah, this is very, very important. Now 10% is very clean, easy example I've given, but the real example is actually 10% until the 5% is reached. So there is more complications to it, the way you calculate retention. Wow. And there is more calculation and claiming of GST as well. Because when there is GST on retention, you cannot claim it or you cannot pay it to the government until the actual money is released and actual money is paid. Because when I'm using two hands here, this is my client because the money is coming in. This is my subcontractor. I'm going to hold retentions on him too. So there's a retention register I maintain. In the same scenario, I'm not going to release retentions until he gives me a claim. So I go like, all right, I'll wait. But this is different because you usually tend to use the same subby on different jobs. So you have a relationship. But whereas client is different. That's where the cash flow titan happens as well.
And
the confusion happens as well. And that's why again and again, a construction bookkeeper is a very unique bookkeeping skills that you need to put in.
Yeah, like I think we're really diving into the depths here. The retention side of it, I think, is a very tricky one to understand. So, do you find that that's where a lot of people are, I guess, you forget about money in that scenario? Like, is there a point where somebody may not ever put in the claim for the retention because it's just gotten lost?
Correct. Yeah, because people, when the bookkeeper comes in, 198,000 in the bank account, and they say like, okay, my tax invoice was 200,000. They go, oh, maybe I might have to adjust it. So they go into Xero or MyOp and they adjust the tax invoice, and that's it. And that money you will never see that income raised or tax invoice raised for the retention because the bookkeeper doesn't know.
They missed 20 grand.
They missed 20,000. They missed 5%, 10%, 50,000 in that example, 20,000 in the first claim. The second claim 20,000, third claim 20,000, fourth claim 20,000, fifth claim 20,000. So the total is 100,000 you're missing on. That's your margin. I'll tell you a great story actually. I went to this client, and that's very interesting. When I looked at accounts receivable, what you call the trade debtors, the money's coming in, there is this huge money sitting as receivable. Now, the problem with that is that's not actually receivable. That is, I'll tell you the story. The first scenario is when you look at receivables, you're like, all right, money's coming in, good, I'm happy. You look at the balance sheet, it looks really strong because that's your debtors and that's your asset, and it's really strong. But what has been happening is, in that example, they raised $200,000 invoice to the client. The client pays only 180. Instead of modifying it or deleting this entry, they're raising new tax invoice for $180,000 with GST so that they can give it to the client. This 200 is never cleared.
Oh, wow.
So this 200 is sitting there in the accounts receivable. This 200 will have a profit portion in it. The profit and loss account is looking fantastic. The balance sheet is looking very strong, but there's no money. And you're like, something's not right, because instead of deleting it or modifying it, they kept on raising new invoice and new invoice and new invoice and new invoice and making all this profit. Now remember, every time you raise a new invoice, the GST is captured and you need to pay that to the government. Wow. Unless you have an audit, you have the 20,000 from here, 18,000 from here, you need to pay 38,000 to the government. And they were like, okay, we got to pay 38,000. But you don't have to because you never deleted the invoice.
All right.
And unless you look at the overall picture, you're like, why? Oh my God, the whole process, step-by-step process, you miss the very critical part and making the company look very profitable, but in fact, you're not making that much money.
Yeah.
And that's because of retention. Because they're raising 200,000. If they paid 200, yeah, fantastic, hunky-dory. But because they paid 198, the bookkeeper couldn't match. They said, oh, fine, let's raise a new invoice.
Just
you see that?
make it work.
Yeah, and actually, unfortunately, that company has gone into liquidation.
Wow. So
Dire consequences.
what I'm really hearing here is a bookkeeper, I'm not sure what a bookkeeper's wage is for the year. If you select the wrong one, you could liquidate it.
There you go. That's exactly right. Yeah.
Over 4 or 5 jobs.
Absolutely. Absolutely true. And I've seen this happening.
Wow.
If you don't have a proper construction specialized bookkeeper, these are the consequences.
Yeah. Wow. This is amazing. This is good. All right. Let's get on to another one here, because there's plenty of good ones left. So this one here, why do builders often feel busy? We know that that's true. Stressed, yes. And cash poor even when revenue looks strong.
I think we touched based on it probably very quickly once again. Is revenue looks fantastic. Probably in that example I showed you, that builder had a fantastic revenue, beautiful profit margin.
So just leading on from the retentions, is this why builders feel stressed, busy, but there's no money?
Exactly right. Exactly right. One of the reasons is retention. But the other reason is actually keeping track of how much money coming in accounts receivable. Is it really receivable? And then accounts payable, is it really payable? And one thing what we do just like any bookkeeper has to do, which sometimes bookkeepers might miss doing it, is what we call a supplier reconciliation. So what I mean by that is, in your books, in your zero, you might say, okay, I owe this supplier 5 invoices. You actually get a statement from them which actually shows what is you're owing to them. They might say you owe 10 invoices. Unless you do the supplier statement reconciliation, you will never find out. Okay. So if they say 10 invoices, but you only have 5, you ring the supplier and say, can you send me the other 5 invoices, please? And when you get it, you put in the system, the liability goes up. You exactly know how much you owe them. Go to your project team and say, hey, can you approve it? That point of time, the project team say, oh, don't approve it because we didn't get the stock. And that's where you go like, all right, that's different. I will capture in my system, but I put it on hold. Go to the supplier and get a credit note so that it's official, saying that, hey, I've got an invoice of $1,000, but because you never supplied the material, I need a credit note of $1,000. So at least my plus 1,000 and minus 1,000 nets off, I'm not paying you. But until you do the reconciliation, a supplier statement reconciliation, you never know, are you owed exactly what you are supposed to be owing? Yeah. So that's what we do that as a construction bookkeeper. It's more important, once again, is because there's a complication called subcontractor. Supplier is easy. You go to Officeworks, you have 10 invoices, they send you a statement, yeah, good, you pay. But subcontractor, because he gives you progress claims from his end, yeah, and you do progress payment, and that's where the reconciliation becomes challenging as well.
I have this picture in my head of flying a plane with a blindfold on, and that's where I think, again, being construction for 30 years myself, and just the conversations I've had, a lot of people are in the dark.
Exactly.
We're just looking at the bank account.
Yes, exactly.
Scary, isn't it? How does that make you feel when you see an industry that has so much potential and, I guess, money tied up in it, that a lot of the people running businesses are damaging their own ability to earn?
See, maybe it's a philosophical answer. What I feel is, when I go and help builders, it really opens their eyes up. And they go like, Krish, nobody told us. And it's very emotional as well, saying that because I really respect entrepreneurs in general, because I genuinely believe that the whole country, Australia, is dependent on these small business owners. Yeah. These small business owners put their hard-earned money, their houses online, go to the bank, get $1 million and start a business and hire 5 people. Those 5 people are employed because of this guy who's got his house on the line. Mm-hmm. When I'm able to help this guy, a small business owner, showing him the numbers with my expertise, like I feel very valued. I feel like, thank you for giving me this opportunity. Like, you are the one running the country. I'm just showing you the numbers. But thank you, thank you for giving me this opportunity. And that's what I want to do. Like, I genuinely want to sit with builders, like any entrepreneur for that matter. But building is very close to my heart, because Australia it's a great country. It's like fair income country, hardworking blokes. You see high-vis blokes working, doing carpentry, electrician.
It's our national uniform.
That's it, isn't it? Go home, have a beer, relax, get in the morning, have a sausage roll and work. Hardworking blokes. And I feel like someone needs to look after them. Isn't that a great opportunity that I get that opportunity to tell them what I know? I don't know everything, obviously. I can't tell them how to make a table or a chair or a paint building, but I know my numbers. I can tell him the numbers, which is really core for the business, to run the business. That's why I feel honored. I feel valued for this. So yeah, thank you builders for giving me this opportunity.
I'll share a little bit more there. If you come in and straighten out the numbers in a business, I don't know if you actually realize what you're doing, because being in a family where the business is struggling, the mother and father can start having friction. The kids feed off that. Maybe, there's a whole lot of domino effects that happen in a family, because I've been through this.
Yeah.
And it becomes, I've got that in my voice too. So if you can straighten out the numbers in a business, you effectively take the happiness from 6 to 10 in a business. And I may be, going back to my own, feelings here a little bit, but to have a happy mum and dad in a family, because their business is running, the husband feels, or whoever's running the business, husband or wife, they feel successful. That bleeds into the family, and the whole unit's vibing. And I've seen that.
Yeah.
And I've seen it the other way, when it's just struggle. Can't pay this, can't pay that.
Correct.
You're breaking down on the stairs because of all the pressure. So straightening out the numbers is not just, a thing that people think they might, could do. It's a necessity for the entire ecosystem of the family.
Yeah. As I said, very honored to get that, to play that small part.
Yeah, it's not small, Krish. It's a big one. Yeah, I hope you realise what you're doing, mate. It's
God bless.
You're doing a good thing. All right. Let's move on to another question here. Break down what RCTI stands for everyone watching, please.
Good question. So, RCTI, it's recipient created tax invoice. So, say, for example, in layman terms, you go to Coles, you purchase something. You pay money to them, they give you a tax invoice. So when you are paying the money, you receive the tax invoice. So you're the recipient of the tax invoice. What happens in building industry? The guy who's actually paying the money also creates the tax invoice. That's why it's called the recipient creates the tax invoice. So let's go back to the initial example, what we were talking before in that building example. A construction industry example is like, you raise a progress claim for $200,000, you give it to your client. The client says, okay, everything is approved. I'm holding back $20,000 in retention, and the balance is $180,000 is approved. And GST on top of it is $18,000, which is $198,000. He gives money into your bank account. On the same token, the client also gives you a tax invoice. Now, in a normal scenario, you as a builder needs to give the tax invoice. However, in the construction industry, the guy who's actually paying the money, he is giving me the money. He's also giving me the tax invoice. That's called the recipient created tax invoice. Now, where it becomes confusing is in that example before, a normal bookkeeper, if you want to get money, you need to raise a tax invoice in the system. So they raise the $200,000 as a tax invoice, not as a claim. So in Xero or Mayob and a normal non-construction software, you raise a tax invoice and give it to the client. Good, fantastic, you wait. The client also sends you an RCTI, a recipient created tax invoice. So the bookkeeper looks like, okay, this is a new tax invoice. So you go and enter RCTI again, even though it's for the same project. So the bookkeeper is like, they're confused. They look at it, they're like, okay, instead of deleting it or modifying it, they leave that one as it is, and they raise a new tax invoice because this is a tax invoice, this is a recipient created tax invoice, but they look like they both are tax invoices. I need to put that in the system, so they do it. If you don't understand the overall project, the progress claims and everything, this is a very rookie mistake I see on and on and on again. Wow. So that's why this RCTI is very, very important. Yeah. So as soon as I see RCTI, immediately I go and check in the software, did we raise a tax invoice for this client already? If we have, either modify it or delete it, and then make this an official one. Construction principles tells you that you never raise a tax invoice as a builder. You give the progress claim Nothing happens in the system. That's just a piece of paper. Let the client approve it. And then let him ask you to raise a tax invoice, or let him give you the RCTI. Until that point of time, do not do anything in the system. Because I'll tell you another classic example. Say you raise, let's take a random, very drastic example, right? You raise $1 million claim. There's $100,000 in GST. You've already raised the tax invoice, $100,000 GST. Let's say that's 30th of September. Now your software tells you that $100,000 in GST you need to pay to the government. Mm-hmm. Let's assume, as a drastic example, no expenses. So you go like, all right, I did not get that 1.1 million, but it's an accrual accounting. I need to pay that 100,000. You pay 100,000 to the government. Client only approves 50% of it. So he's only approved 500,000 and the GST is only 50,000. So you're only owed 50,000 to the government. So now, two effects. One, first of all, you did not get the money in the bank account. Second, you are only owed 50,000, but you paid 100,000. So there is this catch up until next quarter to catch up or do an amendment. That is an administration work that you need to get your tax accountant to do. So there's a lot of cash. If it's not managed properly, as you can see, there is timing issue, there is calculations issue, there is GST's issue, there is RCTI's issue. So it's just not simple money coming in, going out. Mm-hmm. There's a lot of complications involved in it. And that's why I keep on saying again and again, a construction bookkeeper will understand. And that's what we keep on saying, that the specialization comes in. And the reason why we call ourselves specialized is because we do this day in, day out, day in, day out, day in, day out. We keep on doing it. It's the repetition that makes us the specialists. Yeah. Then when we keep on looking at the stories, that's where we see like, hang on, why is it not right? Hang on, why? Because we keep on seeing the stories again and again. So as soon as we walk into an organization, we have a checklist at what we do. Okay, where is the money going in? How's your profit and loss account? How's your balance sheet? How's your receivables? How's your payables? How much is it outstanding? And industry is only 10%. If you're making 25% margin, right, that's doubtful. Mm-hmm. Something's wrong. So that's why, so happy that, we call ourselves the specialized construction bookkeepers.
It's wonderful, Krish. I've got one quick question for you.
Thank you. Yes.
When you do go into a business and you do check the RCTI as a percentage, how many times do you find it being done right?
It really depends on the size of the client. Okay. Because the bigger clients are able to afford a full-time accountant in-house who comes from construction background. And where I see the problem happens is the smaller clients who have probably 5-6 projects going on at one point of time. One project manager is managing 2-3 projects. One contract administrator is managing 2-3 projects. One project engineer is managing 2-3 projects. When you have this one person managing multiple projects, they lose that control on the finance. They go like, all right, I need to go on site. I need to build this KFC. I need to build this Subway. I need to build this McDonald's, because I deal with commercial builders. That's what my clients do. When they're really stretched, when they're busy, when they're running pillar to pillar, they lose that control on finance. And that's where an everyday bookkeeper will come in and they manage it with just like a consultant or a cafe or a restaurant where the money's coming in, going out. Again, they're not doing intentionally something wrong, but it's not their expertise. That's why you need that construction bookkeeper expert coming in and looking at managing each side of it so rigorously.
Wow.